Yeah, well, I think the global economy is in a very strong footing, this year and I think going to next year. And I think if you kind of think of growth being strong and we are in a situation where global central banks are still on a rate cutting cycle, it might not be as much as as much as this year. And I think if you combine that with some of the big structural trends, for example, AI and a lot of productivity gains, I think one could still be bullish on stock markets, for example. Yes, the bull market's been, running for the last 2 years.
Doesn't that just mean being bullish only on the tip of the spear? AI-related stocks?
I would say that next year will be a case where there will be a broadening out in terms of performance. Yes, technology we think can continue to do well, but other sectors I think will play catch up.
Yeah, because of AI?
No, could be because of AI too. I think fundamentally it's because of a resilient economy. If we don't get a recession, I think there is a case where that S&P 500 earnings growth could be around 10%. So this is a fairly strong outlook, and I think a lot of that 10% will be derived from other sectors such as financials, perhaps even healthcare, even industrials.
Is 10% earnings growth enough, though, to keep valuations where they are now? We're at about, 22, 23 times forward, no, for the S&P?
Yeah, well, valuations are elevated, but as we know, because elevations are high really because of a very strong ROE.
Yeah.
And of course, there might be some leveling out in terms of tech earnings. And I think there is a case where other sectors starts to pick up in terms of earnings growth. So I think valuations-wise, yes, it's elevated, but as long as the economy continues to be robust, earnings deliver, I think the stock market can continue its upward trajectory. But bear in mind, it's not going to be a straight line.
Yeah, fair enough.
There will be bumps along the way.
All right, so